In this week's episode of the Stockscores Market Minutes, we're going to talk about when a stock is cheap to buy. With the recent weakness in many areas of the market this past little while, there are opportunities, but you need to know what to look for. Plus, we'll do my regular analysis of the markets, try to figure out if there is more weakness coming. We'll look at the day trade of the week on SBEV and run a market scan in search of opportunity and what to look for. So when is the stock cheap to buy? Well, of course, it's cheap just before it starts to go up. So we need to understand that price level where a downward trend is likely to reverse. If a stock has been weak for a little while, you could say it's on sale, but you need to make sure that you're not trying to catch a falling knife. So where does price change direction? Well, this typically happens when price falls into support. Now, support can be defined as a horizontal price level on a chart, or it can be defined by an upward trend line. And what we find is that when price falls sharply into these support zones, even though it feels like the stock is really in trouble, that is typically the area where it will reverse direction, and that's the best time to buy a stock when it's on sale. So let's look at a few charts and just really emphasize these points. Now, we can do this in the very short term. This is the chart of Apple. And what I've got here is Apple going back about a month. And if I draw a trend line across these bottoms, so I'm using these, what we call inflection points. If I take that point out, look at where it stopped going down. It stopped going down at the trend line and it started going up. Now at the same time it was going down here for a few days, and when it got down to this horizontal floor, which was that price level where it reversed, it also found support and bounced up. So for a shorter term trader, using something like this 30-minute chart, looking for weakness that's coming into support either at an upward trend line or at a horizontal level of support is a good place to look for buying opportunities. Now we can do that in the longer term sense as well. This next chart is of Suncor Energy, and this goes back a couple of years. And what I want you to notice here is that, again, price falls into support. So here you had horizontal support, you almost hit it there, and then once you start to break that downward trend line, after you've come back to support, it usually bounces. Trend lines as well. If we take our trend line here, and I just let it come up, up, up until it hits this point right here, carry it outward, now you see that that's where the stock stopped going down and started going up. It's not perfect. You notice that sometimes you tickle through it, sometimes you're a little above, but when you get a reversal signal around the areas of support, either at trend lines or horizontal support, you often get a reversal, and that's a good time to buy a stock when it's cheap. All right, let's get into this week's market analysis and figure out what's happening with the markets. We've had a fair bit of volatility the last couple of weeks, and what you see here is some selling in the latter part of last week, and then at the end of the week we bounced up a little bit on Friday, so we were quite oversold. The question is, where are we going? Well, in the 30-day 60-minute time frame, we're really neutral. We're headed sideways with a fair bit of volatility, which means there's quite a bit of uncertainty. What we're looking for is, can we break this downward trend line from a rising bottom, or will we instead break this upward trend line, which is held so far, and if we do, then we're going to head lower. Now here's another great example. I drew that trend line across this inflection point and this one, and price fell into that trend line and it bounced almost perfectly. All right, let's take a look at the longer term chart of the S&P, and you can see that we continue to be in that long-term upward trend, and therefore the buyers remain in control long-term. We've had a few months of sideways trading, but it hasn't broken that long-term upward trend line. NASDAQ 100, fairly choppy trading. You can see the volatility here is not a lot of volatility in terms of how tall the candles are each day. And here we're getting a lot more volatility. Look how tall these daily trading ranges are. And that's basically a sign that investors are feeling uncertain. We don't really have support until down here, and so this NASDAQ market could fall a lot farther before it hits that support zone. However, our upward trend line is right there which is where we're holding so far. And as long as we hold that, we can say we're still in an optimistic pattern. If we break down, then we're probably headed toward that 350 level on the QQQ. IWM, the Russell 2000, has really been underperforming the larger cap stocks. You can see again this past couple of weeks weakness, but it has fallen into a horizontal zone of support. Look at how often it bounces off of this level, and it appears to be doing so again. We had weakness early in the day on Friday, and we came back to close above the open and slightly up for the day. We still need to break that little downward trend line, and then this one. There's lots of work for the small caps to do, but I would say it's more likely to go higher than lower in the short term because we have fallen into that support price where in the past it has reversed and headed higher. All right, let's move on to the Canadian markets now. And again, the TSX 60-minute chart going back 30 days, got a nice upward trend there, building an optimistic pattern toward resistance. You'll notice that the TSX chart looks better than the S&P chart in the short term, and that's because of oil. The energy sector is pretty strong, and that has kept the TSX higher. I wouldn't say this is a really bullish chart. We're still more or less sideways, but we do have optimism building, and that could lead to a breakout. On the longer term chart, much like the S&P 500, just holding that upward trend line, and so it's still bullish in the long term. TSX Venture, you can see that we've got those falling tops, and that is a sign of pessimism. We have strong support right here, that horizontal support zone that's been hit a few times. So if we fall down to that, we should expect it to bounce. If we break down through that, then we'll probably go into further weakness. And that's what to watch for in terms of a crash for those stocks. All right, on to the currency sector. And here we have US dollar, had a little bit of weakness this past week, breaking this upward trend line. So that's a bit of a concern for the US dollar, pointing towards perhaps lower prices ahead for the US dollar, and I expect that we could see it test this little price zone right there. Don't be surprised if we get that weakness. Bitcoin continues to be weak. It's been weak for a few months now. It went through this support. Next stop is this support. We are still in a downward trend and therefore remain bearish on Bitcoin. Same can be said for Ethereum, although it is fighting to hold its upward trend line. You can see I just took this point, and that's right where we are now. If we can hold that, then maybe we bounce back toward the highs on ETHE. On to commodities, and the weakness in the US dollar helped gold a little bit, but it is not yet broken out of this little pennant pattern, and so until it does, we should remain fairly neutral on gold. Oil moving to new highs, or local highs anyway, and looks pretty solid. And finally, the fear chart, you can see that we've had a little minor blips in fear here, but we really haven't created a lot of it. I think that the market is showing some concern. You can see volume picking up on the VXX. So I think more people may be buying some insurance, but we still haven't had a formal breakdown. So my ratings then: bullish long-term, neutral short-term for both US and Canadian stocks. Gold neutral on both timeframes, and oil bullish on both timeframes. Markets have suffered short-term corrections down to support, but made a bounce on Friday that may carry into next week as long-term momentum is resumed. There's not a lot of buying opportunities out there unless you are very short-term oriented and taking advantage of abnormal stocks. Every day there's 1 to 5 very abnormal stocks, and that's where the action is. But you have to be a pretty short-term trader to take advantage of those. Gold is stable, oil is strong, and as I said, fear is low. All right, now let's move to the day trade of the week, and this is one of those stocks that was very abnormal. SBEV came up on our action candle finder at 9:34 Eastern Time with the action candle right there. It was also a stock that had been abnormal earlier in the week, and it had been building a nice pattern on the 13-minute chart. So not only was this a good breakout on the 2-minute chart, but it was also a good breakout on that 13-minute chart. So your first entry was there and had a quick run higher. To me, when you're up, up 11 RR there, and then you start to break the pullback, that's a decent reason to sell. But then there was an opportunity to buy it back again when you had a break from an ascending triangle right there. You can see another pink dot, another 2-minute action candle, and that was for a good run into the close. Now, the economics for someone that bought at the open and held until the end of the day were very good. For $100 of risk, 990 shares, that was a $2,079 position. Can't margin this stock at the time because it was under $3, but still a $2,000 gain on a $2,079 trade for a 96% return on a one-day hold. All right, let's jump into the Stockscores market scan now and just run the abnormal break scan, and we'll just do some chart reading to get you a sense of what to look for. So the abnormal break scan looks for stocks making abnormal moves, and we can adjust it as well. I could say I only want to look for stocks between $1 and $20 if that was my interest, and then go down to the bottom and click on Run Market Scan. It found 10 stocks to look at, and so I then click on Go. This is, of course, a tool on the Stockscores website for Stockscores members. So here's our first stock. You can see it's breaking abnormally in price, but it lacks volume. So not ideal. It does have a rising bottom. That's a positive. Your downward trend line is right there. So your upside is kind of limited to that price zone. So it's an interesting chart, but I don't think good enough to deserve our capital. Now here's VOLT. Here you can see that the volume has picked up, so the market has taken some interest in it. It has broken the downward trend line, some good price action there. The main problem is that there's a lot of volume that traded in this range, and that's going to be a ceiling on the upside. So if I say to myself, okay, the ceiling is going to be around $4.50, maybe $5, and I'm buying at $3.75, and my stop is down here, I don't really have enough upside to justify the downside. And that's the reason why I pass on this stock. Even though it's got some good signs of life, the reward for risk potential doesn't really make sense. All right, so here's another one. Breaking a downward trend line, that's good. Very abnormal volume, abnormal price, was on our day trading list on Friday. But again, it's going to find strong resistance up here because it's hit it many times. And just as stocks reverse when they fall into support, when they also rally into those strong areas of resistance, they often get stuck as well. And so for that reason, I would pass on ATIP. Here's SBEV, the one that we just talked about as the day trade of the week. It managed to plow through this resistance quite handily. But the reason it could do that is because of the huge volumes that it traded. You know, there were going to be sellers at that price level, $2, and it stalled under $2 for 3 days, and then it had the volume to chew through it. The question is, where does it go now? Well, it's got some resistance there, which so far it's closed above. Given the intensity of the move, wouldn't be surprised if it gets a little pullback, but ultimately I think it can head up toward that $6.50 level because that's the next level of resistance. So I would trade this on a short-term basis. If it pulls back, watch for a break of the pullback, but you have to be watching the intraday chart. So you want to watch something like the 10-day, 30-minute chart, something like that. If we were to get a little pullback and then the break of a pullback, it may then set up to resume the trend. Those are the kind of things that we do in the active live room that we have on Stockscores every day, where I have a live webinar running, and these are the stocks that we've been trading of late. So I'm just going through the rest of these fairly quickly. Let's stop here on CMRE. I can see that the downward trend line has been broken, built a rising bottom, and now starting to break out from the rising bottom. This is called a bottom fishing pattern, at least that's what I call it. What it lacks, though, is volume. See how there's no enthusiasm breaking through that resistance line? So this is a chart that's good but not great. I'd give this a 6 out of 10. If it had a little more volume, I'd probably bump it up to a 6.5, which meaning I think it has a 65% chance of going up. But in fact, I think it's more like a 60% chance of moving higher. PLAB, that bus has left the station, so I don't really think there's much to do on that one. All right, well, that has been the Stockscores Market Minutes. If you've enjoyed it, click on the like button, leave a comment, subscribe to the channel, tell your friends, tell your enemies, and most importantly, trade well.